Hi guys, welcome back to our channel and the 21st episode of the forex market breakdowns. So last week we never did a breakdown because we had some other shoots that we were doing and organizing the event and the bootcamp that is coming up. That's why we never did the breakdowns, but today we'll be here. I'll be doing the breakdowns. I'll be doing them alone because Caleb's pairs are not really moving as he expects, and so he won't be having the setups to share with you. But I have quite a lot. I have like 4, 5, 6, 7 pairs that I can share with you. Actually, yesterday I did quite a lot sharing with you some of the setups I expected. Some failed, some are going on well, and I'm going to update you on the ones which failed, and the ones which are going on well, and show you why I think certain ones failed and why I think others worked, and what you're doing about the ones which failed and the ones which are going on well. So that should be basically it. About the upcoming bootcamp, those who have been asking what content will be there, what will be shared, what are some of the aspects that we'll be breaking down, we'll do quite over bulleting or something of the sort. So I'll send it to your emails, and anyone who's interested in that, if you have your email, we'll send it to you automatically. But if you don't have your email, you'll maybe see it go around on social media or on other platforms, if you're in a WhatsApp group and other platforms. So I'll just go straight into the charts, and I'll start off with oil, then I'll move to gold, and then I'll do maybe other 4 pairs, and we'll be done for the day, and hope you guys will make some profit from what we'll be sharing with you today. So let's dive straight in. So we're going to start off with oil, and I'm going to start off from the weekly chart. So my charts are a representation of what has been happening on oil, and price action has distilled what is likely to come on oil and what you expect in the markets. So looking at this and breaking it down, you can see clearly that oil had been in this channel for quite some time. While we had a breakout late last year, I think in the last quarter of last year, that's when we had this move downwards from September 2018 all the way to December. We had this drop breaking past this channel, and we bottomed officially in December, and from January we made this up leg from 45 all the way to 64.5, which marked a good retest of this line and also served the purpose of being a pullback to this move. So if I used the Fibonacci tool, you discover that this was a 61.8 retracement. We had the formation of a good shooting star candle, and you can see the follow through sending the markets lower. So I never expected this one to go lower past the $60 mark, but now my outlook has changed. This is because I expected at least a touch of R1, which would mark 67.5, and I did an article sharing with you that I expected 67.5 to be touched, but you can see clearly the markets have rejected. Last week's price action was quite a balance. You can see the formation of the candle representing a balance of price action between the bulls and the bears, so there wasn't much that was happening. It was just some sideways movement. But this week you can see the bears are taking over, and if I go down to the daily chart, on the daily chart there's a representation of another channel that I have, levels well marked, and the markets have been respecting my levels for quite some time now on this commodity. So we had a move, the second touch, and I expected this to be the third touch, especially the formation of a strong hammer. But what happened was we had the formation of a sideways movement resulting into the inside bar formation. So you can see quite some sideways movement. Then yesterday officially we had this sort of a bull movement touching 63.5. I remember highlighting earlier in the morning on the group that we could maybe see a move to touch 63.5, 64.5, and ultimately 67.5. What happened instead was we had a move touching 63.5 and a quick sell-off, which meant that the markets were moving lower. So I've changed my bias on this one, and I'm holding that perhaps we could see a break of 60 and a rally all the way down to $55 mark. So I'm looking for an entry on this one. Currently I don't see how I'll be entering on 61 because there's a $60 barrier, and again the 7.5 and 55. So I'm looking for an entry point with a retracement coming in. So if we go down to the 4-hour chart to try and see if we'll be getting any entry point, so I can just first remove that one, then you can move it to this size, and yep, we have this. So yeah, I had this kind of it was a ascending triangle. So we had the first touch, so I can maybe highlight using this brush. So we had this first touch, then we had the second touch, and then the third touch of the line forming higher lows, and then the fourth touch. Apparently you can note that we had the formation of higher lows, but we never had the formation of higher highs. So this resulted in the formation of an ascending triangle, and I expected a break and a rally upward, but you can see we had a break and a quick sell-off, meaning this was a false breakout, and most of us were caught off guard. I personally was caught off guard. My first take profit was at 63.5, it never got to that level. It wicked at the 63.33 and moved sharply lower. So I actually exited this trade currently, and I'm watching to see what the markets will be doing to try and find an entry level. So if we look at what is happening on this price and try and identify where price action might be headed to, then you can try and use Fibonacci levels. And by using Fibonacci levels, we always have to change our approach when the markets change what they are doing. So yeah, you can extrapolate that to discover 61.8 was capping, 27.2 extension comes in handy with 58.5, so I'd round that up to 57.5. So yeah, we'll expect perhaps a sell-off to $58 mark. If we break past the 60, we could get this move, then we could get perhaps a retracement to this point before having the move downwards to this point. Otherwise, we might also get a move to touch the $60 mark. We could then get a retracement to retest this line, and again we could get a sell-off sending this pair lower. If we get a retracement to retest this line, which I think is also highly probable, I'll be watching for the $60 mark. Then I'd have to draw this trend line from this point. Touching that point, and that will be the third point. So perhaps a third touch of the trend line as we test this counter trend line, and then a move lower. But first we have to get to the $60 mark, which I'm pretty solid. 90 pips to the downside for those who want to get trade on this one. That one is quite guaranteed on this one. So 90 pips to this point before having this move to get back to this point. So that's my outlook on oil, and I'll now go down to the next pair, which is gold. So this is gold on the weekly chart, and gold has been moving on a sideways move for quite some time. So we had some knock on this market. We expected some things to happen. Unfortunately, yesterday we were squeezed out and we lost some cash on these positions, but that happens, it's normal, and we're trying to get it back by moving with what the markets are doing. Anyway, so we can see that gold on the weekly chart, I don't have my levels marked, but I have my levels at the back of my mind. So I know at this point there's 1285, there's 1305, there's 1325, there's 1360. So I have these levels at the back of my mind, but on the daily chart they are marked. So I honestly expected this one to sink lower to at least touch this point, completing this triangle that is on the weekly chart. So I expected a move up to this point, then a move to touch this point before going higher. But I also had another outlook on this one, and I'll go down to the daily chart and show you what we expected to happen on this one, which is what is happening. So at least I was not caught that off guard. I had some understanding of what was going on. So on this one we had the formation of 1, 2, a trend line. So there's this outer trend line, then there's this channel, and this was the relative pattern, which Caleb is better at than I am. So there's 1, 2, and there's 3, 4, and then there's officially wave 5, which we expected to come in. So we can see clearly that wave 4 acted as a good level. We honestly expected wave 4 to come back a little lower to 1240, but you can see the markets rejected 1265, formation of a good hammer. Then we had the formation of a pin bar at this point, which was also the fourth touch of this trend line, and the key levels also aligning perfectly. The candlestick patterns were good. The pivot points also pointed out that we could be having a short squeeze or a move downwards. But what happened was yesterday we had a quite strong candle with some significant bullish momentum coming in. But we need not to remember that this could be maybe caused by Donald Trump's tweet yesterday. So yesterday Trump was tweeting about the ongoing trade war that is going on between China and the United States. And I think much of what is happening on this commodity right now can be attributed to what is going on, and there's an uncertainty created by the trade war between the United States and China. So I think if we get some good bearish momentum to come in from this point to the formation of a good candle, then I can also go back short and expect this one to sink lower. But with the trade war, also with the uncertainty in the market, with the stocks losing more than $1 trillion just yesterday, then we could maybe see gold rally all the way to 1360. So on this one, I'm quite open. I'm waiting for a break of 1305 to confirm the bull rally. But if the 78.6 Fibonacci holds and we get some good bearish continuation, at least a break of this counter trend line, then we could be maybe sinking lower to 1240 as I earlier indicated. So I'm still 50-50, especially due to the fact that yesterday this was caused by the news. If there was no news causing this move, then I'd expect a move back up completely. So I'm still sitting on the fence. I'm watching. A break of 1305 confirms my move back upwards, but as long as the 78.6 fib holds and we get some bearish momentum coming in, a break of 1285 will confirm my short bias again all the way to 1240. So I'm open to this one. Also, some sideways movement might happen due to this uncertainty created by the trade war. So be open on this one. Don't trade it for long-term perspectives. Perhaps 60-70 pips, you're out. That's the outlook on gold currently. So going to the 4-hour chart. In the 4-hour chart, I also can draw a trend line. In fact, for this one, I won't go to the 4-hour chart. I'll go to the 2-hour chart and show you what I did. So there was this triangle that was formed on the 2-hour chart, and you can see, you can plot it from this point and again this point. So there's A, B. So I'll just label it so that you guys can see. So there's A, B, C, D, E. So this is an Elliott pattern, and you can see this was the breaking point, and you can see, boom, we had some strong bullish momentum sending this pair higher, at least to 1305. R3 is now capping, and you can see shorts coming in. But honestly, on this one, I'd advise you to sit on the fence, at least wait for 1305 to confirm bullish moves, or come back below 1295 to confirm bearish moves. Executing at this point, expecting a break of 1295 could be brave for some people, but if you trade in a conservative style, I'd advise you to wait for 1295 break at least to confirm the shorts. At least a move to R1 will also be guaranteed, so that will be 80 pips to 1290, 1285, 100, whichever. So for this one, sitting on the fence, waiting, and we'll see what happens on this one. We'll keep updating you in the group and on the site. So let's go down to the next pair. So this is dollar CAD, which is the next pair that I'll do. Then I'll maybe do dollar yen, and we'll end up the day on the euro pairs. So dollar CAD, I still have this channel. I'm holding into this channel, but we've been having some sideways movement on the weekly chart for now, quite some significant number of time, about 8 weeks, 9 weeks. So probably for the last 2 or 3 months, we've been moving sideways, not trending, not doing anything much on the weekly chart. So I won't even dwell on the weekly chart. I'll just go down straight to the daily chart. And on the daily chart, you can see I have a line, the first touch, second touch. So I can maybe highlight what I'm talking about. So this is the first touch. And you have the second touch coming in at this point. And the third touch. The third touch officially coming in up here. So with this one, you expected the formation of a new high, which happened. You can see the touch of 1.35 marks the formation of a new high. But 1.35 is proving to be quite a significant level, and the markets seem like they won't be breaking past 1.35. So how will I be trading this one, or how am I trading this one currently? If you examine it closely, you discover that this was a ranging market, which was taken out. And after this one was taken out, we officially went into another ranging market at this point. So we've been moving from ranging market to ranging market. And on an article in the group I did, we talked about ranging market, from ranging market to ranging market, and how you handle such positions. So going down to the 4-hour chart, you can get a vivid picture of the ranging market that we're talking about. So yeah, going back to history, you can see 1, 2, 3, 4, 5, 6, 7. Then we had the breakout. Officially after the breakout, we're now touching the first touch, second touch, third touch, and now we're almost going to the fourth touch. So if we touch R2, the formation of a good bearish candle, I'll be sending this one shorts, expecting markets to move lower. A break of R2 will give me the warning that perhaps we could be going higher to form new highs, which will also mean the completion of the channel that we have on the weekly chart. So on USD CAD, watch out for 1.35 formation of candlestick patterns. If you get some good bearish signal, then I can guarantee that you can bet some good cash, moving the markets to 1.33920, 110 pip region, which may happen in a very fast way because the markets are ranging and we don't have any sense of direction. So that's how I'll be trading dollar CAD, and I'll now go down to the next pair, which is dollar yen. So this is dollar yen, one of my worst pairs. I really don't like trading it, but I also stock it to watch out for the market opportunities and also to understand how the dollar is performing relative to the yen. So Caleb actually calls it the devil's pair. So how do you go about trading the devil's pair? Because it doesn't move that much, and again, if it moves, it doesn't have the sense of direction. So there's a lot of disadvantage in trading such a pair. Anyway, you can see that we have the formation of a triangle also on the weekly chart. I also don't have very good levels on this one. That's why one of the reasons I actually also don't like it that much. The reason that I haven't gotten very reliable levels on this one after trading it for quite some long time. So we officially touched the pivot point. Moving averages seem like they'll be crossing over to the downside. We had the first leg sending this pair lower early January. This was a flash crash. Then you had a pullback all the way, and it seems like we are going back now officially to form new lows, which will take some significant number of time. So going down to the daily chart to see what's happening that's relevant to us right now. On the daily chart last week, we opened with the formation of a gap, and the gap was not yet closed on this pair. So you can see we still have some significant space on this gap, and I think it will be closing soon. We have had a bearish run all the way from 112 mark to the 109.3, which marks the at least 300 ticks from 112.2 to 109.3. So that's 300 ticks in a straight leg. It doesn't happen so many times on such a pair. So I honestly expect a comeback at least to touch S1, which is 111.1, perhaps a close of this gap, which will also mark the pullback of this move before going down lower. So there's quite some number of pips which could be made from trading this pair right now, and I'm currently long on this pair. I'm riding it higher. Yesterday there was also the possibility of going in long, but we expected a short squeeze, which happened, and I can show you the short squeeze on the 4-hour chart. So this is the short squeeze that we expected to happen. It was currently trading at 109.5, and I expected this move lower, squeezing out those who had already executed the longs at this point, and so it came in, sink lower to S2, giving me a better level of entry, and now I'm in. So my first target on this one will be 110.38, just as you can see. Then I'll be looking for R1 and finally R2. So can pretty guarantee getting to R2, but perhaps we'll get a pullback before getting to R2. So for those who have not yet executed, can also wait for a pullback before going in long to get to 111.1. So that's my outlook on this commodity. First target 110.308, second target R1, third target 111.1, which comes in confluence with the R2 level. Also watch out for the trend line, but I expect a break of the trend line. So probably we'll get a move to touch the trend line, then we'll fake out those who want to go short. We may maybe sink to this point before getting the continuation to touch the 111.1 mark. So yeah, that's a probable scenario that is likely to happen, or we'll get a break, a retest of this line, and a continuation to touch on 11.1. So hopefully this is what will be going on this pair, and you can be able to make some profit on this pair. So I'll do my last two pairs, Euro USD and then Euro New Zealand dollar. This is Euro USD weekly chart. The euro has been losing for quite some time. I honestly expect it to continue sinking lower and tanking lower. Europe has so many problems which I don't see how they'll be solved, and investors know this. So we're shorting this market, we're sending it lower, but still we never forget to look at what price action is doing. So looking at price action on the weekly chart, you can see that clearly we've been forming lower highs and lower lows. So I'll even mark for you so that you can see the lower highs. So we had the first lower high coming in at this point, second lower high, third lower high, and currently we're coming in touching the third lower high. So I expect the markets to continue sinking lower. And if I go down to the daily chart and show you what's happening on the daily chart, so I'll first scrap off these ones so that you guys will be able to see well. So I can scrap off that one, and I can scrap off this one, then I can correct this one, and you can scrap off this one. So we have this. So yeah, euro has been forming beautiful patterns, and for those who've been trading this one, I'm sure you've made enough money by just going with what the trend has been doing. When it's time to buy, you buy, and when it's time to sell, you sell. It's not that easy, but basically you can see by looking at history, you discover that the patterns have been beautifully forming lower highs and lower lows, lower highs and lower lows. So the recent lower high comes in at the pivot point, the next point, which is also a retest of the counter trend line, as you can see on my line, and also using the Fibonacci patterns, you discover that this is the 61.8 retracement. However, if we get some good bearish momentum if we get some good bearish momentum, which I expect to be coming in today, then we could see the euro sink to S2 first, and ultimately 1.103, finally 1.095, which will mark the touch of this lower line. But if we get a close above this line, which is likely not to happen, I don't expect this to happen, and I wouldn't bet my cash on this one happening, then perhaps we could see a retracement of this move, which is an ABCD pattern. So I'll forgo this point and now take this one as one move, which is an impulsive. Then we could see the markets move to R1, touch the 61.8 or the $50 mark. So touching of this line or the 1.13, the R1. So there's a lot of confluences aligning at this zone for a retracement coming in to touch this point, which will also serve the purpose of squeezing those who have already executed shorts at this point. So that's why I'm also putting that at the back of my mind. We know that the markets will always favor the minority, and while the majority do other things, we try and favor the minority. So perhaps we could touch this point and move lower to touch this point, and this one will also be possible. But we must stick to what price action is doing, and currently what price action is doing only leaves us with the option of going short currently at where the market is trading. So we'll move our fibs from this point to this point, take that to be our level 61.8, a retest of this counter trend line, shooting star formation, and we could see the market sink lower. So currently I'm short, but if we get a break above this, which will likely to happen today or tomorrow, then I'll be looking for 1.13. So I have a tight stop on my short order right now, and I'll be looking for the markets to sink lower to S2. So you can trade it that way, have a tight stop, wait for the markets to do what they do. But you can also decide to wait for the markets to move higher, touch 1.13, but risk the move. You can risk missing this move that is likely to happen to touch S2. So I'll do my last pair, Euro New Zealand dollar, and we'll be done for the day. So this is the last pair that I'm going to be doing, Euro New Zealand dollar. I believe there's a good setup on this one, probably 250 pips on the table within this week or next week to come in at this pair. So looking at this pair, you discover one, it's so directional, and two, once it starts moving, it moves in one direction for quite some long time. But if it gets to certain level and it respects the levels, then reversals are also likely to happen. So the recent move we had was a drop from 1.77 all the way to 1.64 straight leg. Then we had a correction touching 1.71, sending this pair lower again to touch 1.604, resulting into the formation of a double bottom. So I can highlight this to be a double bottom, and I've been watching this market move all the way from 1.64 to 1.71. Unfortunately, I haven't been taking part in some of these moves because I haven't been getting good entry levels. So that's my problem. You can also try and see how you'll be benefiting from such moves. Anyway, we've currently hit the 1.17 level, and if I go back to the daily chart, I think we'll be getting a move lower. Why, you may ask. You can see clearly from when we bottomed at the 1.64 region, after we formed this double bottom, we've had a straight leg upwards to touch this level. So we only had this slight retracement, which I won't take as much of a retracement. So I honestly expect the markets to at least be capped by the 1.17 mark. So I'm waiting for today's close, perhaps to be a shooting star or something of the sort, and I'll be going short to this market at least to 1.68250, which is the next level I'm expecting. But watch out for R1, 1.6950, and ultimately 1.68250. So if I draw this one, I'll be expecting the markets to move here 71 fib first. If we get a break of this one, then perhaps a break of 78.6 and a take out of this initial higher low, then the markets may be perhaps move even lower to S1, making a retracement of this before breaking past this double bottom and moving higher perhaps to touch 1.77, which is the target for the double bottom. If I go down to the 4-hour chart on this one, I have a beautiful channel in place which has been formed since the market started moving from the 1.64. So we had this move, then we had this slight correction, and now we're having this move. So clearly we've touched the channel on the upper point, and I expect this one to sink lower. A break of the inner line on Euro New Zealand dollar is highly probable, with the moving averages crossover happening, and we'll be getting a substantial number of pips, at least to S1 as your first target. So 1.69091, and ultimately 1.68250. So that's my outlook on Euro New Zealand dollar, one of the favorite setups that I think will be executing this week, and I think it's a low risk trade. So this one is low risk. Of all the trades that I've given out, I think this one is the highly likely one to play out, and I hope that you guys will be able to make some profit from this. And that's it from us. Hope you guys have loved what you've given unto you, and don't forget to like, share, comment, and subscribe to our channel. And lastly, invite your fellow friends to come and watch out what you've been doing by building a community of profitable forex traders. So that's it. Have fun. Cheers, guys.